Everybody loves a low-cost investing platform, and the one we're talking about today is InvestEngine, and it definitely ticks that box. It is commission-free investments. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. This video definitely isn't financial advice, it's just a bit of education about how to use the InvestEngine platform to invest. And past performance definitely doesn't guarantee future results, and when investing, your capital is at risk and you may get back less than you've put in. So why do I like InvestEngine so much? I suppose there's a few different reasons, and on the screen you've got them. It is unbeatable value. You'll see in a second how cheap it can be to use this platform to invest in ETFs, and there is that power of ETFs. In reality, you could just go and do all your investing with one single exchange traded fund. What I love about the InvestEngine platform is the way that they allow you to slice and dice the information. You can see what it is that you're actually investing into really easily and really simply, and you'll see that when we get onto the platform later on. It is so easy to do this. Everything can be automated, so you literally have money gets drawn out by a direct debit, boom, straight into your investments based on how you have set that up. You can diversify. You can pay in as little as £1 in to buy a fraction of an ETF, and you've got that choice of either the DIY or the managed fund approach. In this video, we're going to have a look at the managed portfolio approach. So maybe you're new to investing and you're not quite sure what to invest into. You could leave it up to the InvestEngine experts, and they will basically build and manage that portfolio for you. So it's really hands-off, really easy to do for a small fee. You can get really global diversification, and you'll see this as we move through the example later on when we actually build a managed portfolio. It's relatively low cost, so there is the managed fee cost of 0.25%, and on top of that there are a couple of other costs that we'll cover in a second, and they do all the ongoing management for you. And then I will give you a few pros and cons about the use of the InvestEngine platform and why I am so excited about the new changes that are coming in on the individual savings account processes, where you're allowed to have more than one ISA provider every year. And I'll tell you what I might think of doing at the end of the video. Another thing that's really important when you're using an investing platform is that it is authorized and regulated through the Financial Conduct Authority and the Financial Services Compensation Scheme. If you've been finding some value out of this content, I'd love it if you could like and think of subscribing so you can get new content coming to you as and when it's released. I'd love to hear, are you using InvestEngine, and are there some features that you just couldn't do without? Love it if you could drop a comment down below. So if you've used the link down below, you'll end up getting a bonus of something between £10 and £50 for using my link, and I get a little bit of a kickback on that as well. Once you've set everything up, you just click the Add New Portfolio, and that takes you through to the choice of whether it's a DIY portfolio or a managed portfolio that you're going to create. So once we are set up, we then look at going in and deciding what kind of portfolio we want. This time we're going to have a look at investing into a managed by you portfolio. So you click on there. There are lots of questions that are going to come up. So I'm going to put in £1,000, continue, and then lots of questions. Just go through, answer these as they reflect your personal circumstances. I always say invest for the long term, so I'm going to say longer term. I am probably looking for a mix of both. I don't really care what happens, whether it goes up or down. I'll be buying more if it goes down, and a big loss won't have an impact on me. I will agree that I would prefer a guaranteed rate of return in uncertain terms, and no, I'm not looking at taking it out, and I've invested in a few things, so we'll just tick a few of those, and then it goes away and starts creating your InvestEngine managed portfolio. There are 10 different portfolios and they will all depend on your risk appetite. So if we pull it away down to one, what you will see is you have a really low number of equities in here, but high number of bonds. If you then go to the other end and you switch that to 96% equity, 4% bonds, that is way more risky. What we will see is on the allocation side of things, you have got a load of different equities in here and you have got some bonds. As you change your risk and as you move through the different growth models, you will see that the percentages of your holdings will change. So let's say we'll go for something like growth model 7. That's giving us exposure to the S&P 500, world small caps, FTSE 100, etc, etc. Let's go for save and continue. What you will also see in here is you get a projection on what your growth is going to look like. So this is just investing £1,000, and if you just left it that in 20 years, and you can see that in an exceptional performance period you would see £5,500, your £1,000 being converted into about 5,500, right down to potentially just under 1,400 if it has been a worst case. You've obviously got to look at what would the effect of inflation have been on your money over those 20 years, and does that then reflect that you have potentially underperformed? Potentially that might be the case, but that is how simple it is to set up your managed portfolio. You would then just go into add some funds, and then Bob's your uncle, and you have a nice little managed portfolio set up there. And over time you could change that. And then let's just have a quick look at what that your portfolio actually looks like. You have got 68% in equities, 30% in bonds, and then 2% in being held in cash. And you can just flick through and see all the different ETFs you've invested into, and then the different bonds that you are invested into. You could set up a savings plan, and basically you have to initially put in £100 into the portfolio, and then you can set either a weekly, fortnightly or monthly pay direct debit just going straight into your account, and it will automatically invest into whichever growth model you've chosen. You can also go into the options. You can decide to set up your savings plan through there, or you could go and rename your portfolio if you wish to. You could also move cash in, you could sell, do whatever you want, or withdraw some cash. You can also go and see your analytics and just click through those, and you're actually looking at 6,311 holdings within this growth portfolio. Well diversified and reasonably good value for money. So that was just a quick overview of how you can use InvestEngine. My take on it, I really like the platform. I didn't use it this financial year just because I wanted to dabble a little bit into the dividend stock side of things, and Trading 212 provided me with the opportunity to do both ETF and stock investing. Going forward into 24-25, I am seriously considering coming back to use InvestEngine for the ETF side of things. I just like the way the platform is set up, the easy to use, user-friendly mobile app, etc. So there are lots of pros to using InvestEngine. I think one of the easiest is you've got that wide range and really comprehensive list of ETFs, and they are constantly adding to it month by month. You can look at that commission-free trading in ETFs that you can do fractional. Once you've got set up, you can be investing just £1 into different ETFs, which is brilliant, as well as it does have the ISA and it's got the SIP coming on track very, very soon, and I'm really excited about that. The mobile app is brilliant, really easy to use. The automated features that they've got just make it's so easy to just set things, forget, and let the whole system just run by itself. And I think finally the portfolio, I just love being able to jump through and look at region, what stocks I'm actually invested into, etc. I think the interface is better than the Trading 212 interface. There are some cons. It is only an ETF platform. I think it's going to remain like that. I think that is their USP that they have, and it is how they do that commission-free trading. I might like to see, even though I can't avail of it, the lifetime ISA being provided by them, and also getting the junior stocks and shares ISA onto their roadmap would be something I think that might draw more people in. They also don't have any Vanguard Life strategy options, which might be something that they attempt to get their hands on as well. And I suppose the last con is they trade once a day. You can buy these ETFs once a day in the early afternoon, but while I say that is a con, it doesn't really bother me. Thanks very much for watching, and I will see you in the next one. Cheers, bye.